Hello and welcome back to another lesson. So in today's lesson, we are going to be discussing market structure in a more detailed way and give you examples of the power of three within the market. So the first market structure was basically all just simplified. It's basically giving you an idea of what market structure is. And now we're going to understand what's the reasoning behind market structure and how we can use it when trading effectively. So the power of three in every single market structure sequence behind the algo, there will be accumulation. So that was our consolidation. So that was our period of market where we are simply ranging like so. So this is an accumulation period or a consolidation period. We then have manipulation. So this is usually something like this. So what will happen is we'll spike out the bottom like so. We then have the final phase of the market structure algo, which is our distribution. So what happens? We then have our range in market like so, then have the manipulation, and then finally our distribution comes in to the market. So we have price consolidate. We then have price manipulate and take out one side of the market, any liquidity underneath this range of market. We then have distribution from the banks into further pricing. So let's have a look at a couple of examples for this, just to understand it in a better way. So starting off on Euro USD, we're on the 15-minute time frame, and the Asian session liquidity is usually our accumulation phase within the market if you are trading New York and London session. See here in this example, we have the Asia session range. We then have London Open manipulation. What then happens? We then distribute price into previous day lows. So as you can see here, this was a great example. So if I show here on each part of this and make it the same color as above, this is our manipulation phase of the market. And then we have our distributions phase of the market. So this is our green phase. And as you can see, if we can trade markets like this, it's very easy. So you only want to be trading the power free market structures. So we have accumulation into manipulation, take out all of these traders' stop losses above this range, because as we know, retail traders see this as support or resistance. We then wick out all of these highs, all of their stop losses, and also they see this as a break of structure. So it also induces long positions into the market. All of their buy orders would have been triggered after taking these highs for further pricing, but instead we have been manipulated. Price has been manipulated, and then we've understood this and got in on the distribution of price into all of these lows down here, as you can see. You can see it again for this example. We can see what did price do. Price created, let's say this was our consolidation period. So if we mark this in blue, we then have manipulation. Why is this manipulation? Well, because anyone taking a long position from here would have had their stop losses underneath this low. What happens to them? They get out of the market and then price runs on them. So they're sat there feeling all sorry for themselves. Whereas if they understood this concept and waited for this manipulation phase of the market sequence, they would have been in this trade. We then have our final distribution phase. Where does price distribute to? Probably to a previous day high or low. And as you can see, what does it do? It takes out the previous liquidity. So this is simply happening every single day. You just have to spot it. So let's put on our green again. And this was our distribution phase within the market for this day. So it's as simple as that. Two examples right there in the matter of seconds. We then have it again here. What does price do? Price consolidates. We then have the manipulation down within this candle here. takes out any stop losses above and below these. I mean, below these, right? Any stop losses placed below these lows, we've now taken out. What does price then do? Price then distributes to the previous high, as you can see here. So for any setup, I want you to be waiting for accumulation, manipulation, and then the distribution. I don't want you entering just off nothing. I want you to see some consolidation, range in markets first, and then see the manipulation take place. And then, if not, get the entry down here, wait for a pullback, and then an entry. So that was our distribution phase. And again, that's just 3 cycles in one day of the power of 3 coming into effect. I also have a good example on GU for you. Very nice and simple. 1 second, let me locate it. Okay, perfect. What do we see again? We see price consolidate in a range in market. We then have this low down here taken, manipulated. So if we mark on that manipulation there, this is drawing sellers in, right? This downtrend is drawing a lot of sellers in. But what do we understand when we see a ranging market? We can see and understand that there's all stop losses this side and this side of the market. What do we see here? We see manipulation. We then start to see distribution back into this old high. And as you can see, we're looking at good setups. So for this example, we had a very nice setup. We could have got an entry within here, like so, off this breaker block, which will be explained in a further video. But for now, we're just understanding the 3 phases of the market. So that was a nice setup on that trade. So other than that, that's just these 3 concepts all put together to ensure that you won't ever be manipulated within the markets. So the 3 phases are here. Take note, and I'll see you all in the next video.